At its worst, the rupee had fallen about 3% since February 24th, that is just before the war began. Bond yields from that day to today have risen by 20 basis points. So, we at CNBC-TV18 polled the top 10 bank treasuries in the country, and here are the results. The first question we asked them was, how much can the rupee fall? What is the worst you were expecting? And the answer is a majority of 50% felt the rupee can touch 80 rupees to buy a dollar. But it is important that a good 30% also felt that it won't, the lowest will be 77.50. The Reserve Bank has enough reserves and it won't allow much depreciation. Now, the market is pricing in the fact that our imports will shoot up obviously because of higher crude prices, but exports will also fall because of the disruption to trade. But the pressures will ease in the second half is the expectation, when war could be a distant memory. So when asked what is the average cost of the dollar for the full year 2022, bulk of them said that it would be 77. That's 40% of the votes. And only 20% expected that the average will be higher, going up to 78, 79 thereabouts. Very few. The average is likely to be only 77. Next we come to bonds. The Reserve Bank's CPI calculation will have to be revised higher, and the massive government borrowing program also starts in April. Both these are negative. Now, 40% expect that the bond yield, 10-year bond yield, will reach a high of 7.3%. That's about the highest. But you must remember that a good 50% expect bond yields to spike even more. See, 20% expecting 7.5% and a good 30% expecting 7.4%. So the overwhelming majority expects the highest yield to be between 7.4 and 7.5. But it will fall in the second half. That's the expectation. We asked people what's the average bond yield for the full year. Most said that the average will be only 7 to 7.1%, still higher than where we are now, but it will rise. They added that for companies, the cost of loans will not rise much because government is the only big borrower, and at the moment, banks are chasing borrowers to take money, so not very expensive for companies.